Alright guys, in this video we're going to be talking here about the US Fed decision here in December. We're going to be talking here about the interest rates, the national debt, and the M2 Global Liquidity Index, guys. This is going to be again a very important video. As I told you guys here, I still expect $200,000 here this cycle for Bitcoin, but we're currently seeing that Bitcoin is struggling a little bit, so we're going to do a little bit of a deeper analysis into different indicators, and we're going to be kind of determining where the heck is Bitcoin price going. Are we going to start a bear market or whatever? We basically can see actually that we have about a 4-year difference between each and single here of these cycle all-time highs. Now exactly we are lining up exactly with a 4-year kind of all-time high top out price level date, whatever you want to call it, but you can see exactly there's always like 4 years exactly between each all-time high. So for example, this over here was about 1,422 days, and then if you can see right over here, we basically exactly at this peak here to the upside would be the exact same distance here between these two bull markets. And these two bull markets, they're also very similar in terms of distance. So are we going to see this big bear market that we've seen in the past? Well, what we can actually see here that every single time that we do actually have this big bear market is that we see the M2 Global Liquidity Index here moving to the downside. But still, we are at a very, very high level, as you guys can see, a peak, and we have been trending here to the upside for a very, very long time. Now, quite interestingly, what we do actually see here is that whenever the interest rates actually go down, it kind of coincides with a crisis. So we can see that, for example, 2019, when of course we had that big COVID crash. We can see that also here during the 2008 crisis, when they started to lower the interest rates, we eventually got a big crisis. You can see that right over here with this kind of gray area, as you can see here. So you can see here, this is the gray area. These are these big recessions, these big crises. And you can say whenever these interest rates here, basically since I would say 1980s, like pretty much since the 1980s, you can see that when the interest rates go down, you basically have a period here of a crisis. Then they lower interest rates very, very fast. And then eventually what you can see here is that, well, they go up again, and then eventually what happens is that they start lowering again. You get a crisis, and it happened in 2008 also, happened also here in the COVID period. And now potentially that could be something that could be about to happen here again. But what you can see that there's kind of a trend where they kind of lower the interest rates, and you see that there are lower lows and lower highs, and they're not able to actually maintain higher interest rates for long. And that is mainly here because the US debt, national debt, actually goes up. So this is actually pretty much, this whole debt system is just pretty much a Ponzi scheme. I mean, they're not really able to increase these interest rates much higher to fight inflation. We know that there's a lot of inflation right now here in the system. If you go, especially in the US, but pretty much everywhere globally, energy price is expensive. If you go to the store to buy groceries, you want to buy a house in Los Angeles or New York, it's all extremely inflated, and the assets are also extremely inflated. So there's really no reason for them to lower the interest rates based on inflation. They could probably increase the interest rates much higher. They were actually serious about fighting inflation, but because the national debt is so high, if they keep the interest rates for this long, this high, then eventually all the debt will eventually flip over to these higher interest rates, and eventually the government will just go bankrupt. I mean, they're not able to keep interest rate this high for like about 10 years. Then they would literally bankrupt the US government. There's no way that they would actually be able to spend all the money. They would basically have to spend all their entire revenue here that they actually get on paying the interest on the debt, which makes absolutely no sense. So then they would actually have to print money, and that's just going to destroy the currency. So they kind of keep the facade open that they actually have a working currency by lowering the interest rates and just pretending that inflation is not a big problem. But they're just trying to tame here the Ponzi scheme. The boomers, they have their houses. They have just completely ride this system, as you can see here. They've rode the system here since the 1980s, have completely destroyed it. They have completely inflated their housing value. They've retired. They have a nice swimming pool. But the next generation after that, and especially now the Gen Z, they have to deal with the Ponzi and this big, big problem because we have to pay off the debt that the boomers actually made. So it is a Ponzi scheme, and just with a real Ponzi scheme, the people that get in early, they make the money. And then people, in the end, of course, they go bankrupt and they go broke, which is exactly how the system functions. But anyway, with the interest rates now, the Fed decision, they're basically deciding here that the interest rate is probably going to be decreased by 25 basis points. That is basically what people are predicting. We do actually have this also here. The White House says that the October job and inflation data may never be released. That's because the government shut down. But that's why the number a little bit changed a little bit. I think people might say no change. The Fed might not make a change because they don't actually have any data. But still, people believe that, generally speaking, the Federal Reserve is going to decrease it by 25 basis points. And if the actual information did actually go out, As you can see, it would likely be here a 25 basis point decrease. But anyway, they're going to have to lower the interest rates. And if they don't, they're just going to blow up the whole system. But you still have to deal with inflation. So how can you really protect yourself against all of this? Well, that's, of course, as you guys know here, Bitcoin, which I've held it for a very long time. But I think the most important thing here that you actually have to understand here is that with this national debt, it has already increased by 2 trillion here since the president actually got here into office. And the interesting thing is that we always have this big fight between the Democrats and the Republicans, like, oh, the Democrats are going to destroy the US. Oh, the Republicans are going to destroy the US. But you have this everywhere, like left versus right. But you can really see that the system is set up in a way that there's really nothing you can really change about it unless you have a really creative and strong president which actually understand these debt clocks. But even, the presidents now, they get elected because of their personality. They get elected because of some things they say, because they tell people they're going to give them more rights or more money or free healthcare or yada, yada, yada. It's not really based about actually building up a system. It is mostly just built on personality cult and having a nice personality. You can see it with Kamala, for example, like super pro LGBTQ rights, this and that. First black woman that was the president, and then you have Trump, which is like this conservative man about freedom and making America great. But in the end, they're just increasing the national debt and they're just making you broke. It doesn't really matter who's really in charge. So the best way to protect yourself is, of course, as you guys know here, Bitcoin, which has continued to rise here over the years and continues to outpace here inflation. And that is why I still think Bitcoin is going to hit at 200K. I do think we're going to have we need a very strong news update, as I've told you guys. We just need something like the government just printing money, or the president saying that they're going to adopt Bitcoin, or another country saying they're going to buy Bitcoin. We need something, because we're just in this sideways limbo. And the liquidity index is nice. The stocks are very high. The gold is very high. But I think a lot of liquidity is flowing really to things like AI and gold. And we just need something to kind of pounce the big Bitcoin price to the upsides, to kind of get it back in the spotlight. And then I still think we're going to hit that 200K target here this cycle. And if that is going to be the case, then I think eventually what's going to happen is we're going to go back here to about 70K. And then eventually next cycle, we're going to go to about 500,000. So basically that means that if you're going to buy right now, it's going to be 5x here in the next 4 years. But if you were able to buy here at $17,000, which I actually did, if you guys go back to my Twitter, made a lot of posts about that, then that will be about a 30x. And if you actually bought to when I actually bought first time, that will be over 100x. And that will be in a matter of a decade, because this all-time high would happen in 2029. So in 9 years, if you bought at the same level I bought, you basically make 100x here on your investments, if the target actually gets hit. So yeah, that's really the thing, is that Bitcoin is extremely powerful here to outpace inflation and to fight against the national debt. And just keep it in mind if you are bored or you're looking at the Bitcoin price. I mean, this thing just continues to go up and go up and go up and go up. It's will never go down. The Ponzi will never go down. And you're completely fine. In my opinion, I'm not a financial advisor. I'm a random guy on the internet. But this thing will continue to increase, and there's really nothing that you can do about it. And I think the only thing that's really good is, have gold, maybe Bitcoin. Maybe Bitcoin, I say have Bitcoin, maybe gold, maybe some stocks. But generally speaking, don't hold fiat. And with that, I'm going to end the video. Hope to see you guys here in my next video. Bye-bye.